if you told me that by the end of the year silver would be $100 or 95 to $100, I would believe it. It just seems as though there is a shift in mentality from not only the way that people and institutions are looking at metals. When you see Michael Hartnett from Bank of America and the chief investment officer of Morgan Stanley saying 20 and 25% of your assets should be in gold and silver. If we put gold, most of the analysts out there, what the hell do they know? They keep revising
Of
their
course.
numbers, but a lot of them are saying $6,000. So by next year, the end of next year, so you take
6,000 in gold.
yeah,
Yeah.
divide that by 42, which has been the average price range over the last 100 years. You're at $142. It's coming out of the ground at 7 to 1. So you take 6,000 and divide it by 7, you're at 857. In theory, is it possible? Absolutely.
In today's video, Andy Schectman exposes the one truth almost nobody in mainstream finance is willing to acknowledge. Trust in the global financial system is collapsing, and precious metals are becoming the ultimate escape valve. From a $125 billion repo market emergency injection to a 400 million ounce demand for physical silver to billion-dollar monthly buying from North America's wealthiest investors, Schectman warns that the paper markets are reaching their breaking point. Let's break down exactly what he said and why this moment may be more pivotal than anyone realizes.
No one trusts us anymore. No one trusts the markets. We talked about the repo market problem
Yep.
a couple of weeks ago, where it's not about liquidity because there's twice the liquidity in the system now than there was in the 2019 repo market crisis, but $125 billion gets injected into the repo market. That's crisis level injection. And it's about trust that the banks who trade with each other overnight don't trust the collateral that is being posted, largely mortgage-backed securities, both commercial and residential. There was a very large trader or group of traders together that stood for 400 million ounces of delivery. No, 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 I don't want cash, and I'm not going to roll it to February. Give me my metal. And when you naked short something, over all of the years, the West has been able to do it because no one stood for delivery. As I've often said, less than 1% did. And now the sophisticated money that used to be third world and not sophisticated or wealthy is now wealthy, sophisticated, motivated, and coordinated with other players to where they understand that delivery is the Achilles heel of the system. And we will reach a point, I think, where one of the shorts will break ranks and they'll be like, screw this. It's an existential threat we are covering. Can you only imagine what the board meetings are like? How many billions have you lost for us already? But it's unrealized. I don't care. If they stand for delivery and you have nothing behind those contracts but rehypothecated paper, we've been seeing a pattern lately where later in the month we see contracts that are issued and immediately stand for delivery. It makes it much more difficult to analyze this stuff because most contracts would settle within the first day or two. We're seeing a lot of that happening. So, but this is every single month. Billions and billions and billions of dollars are flowing into the COMEX, and a lot of it standing for delivery. Doesn't mean it all leaves. A good deal has. A lot stays in the eligible account at COMEX, but which is a series of vaults. But you're talking biggest money in North America is literally buying up billions and billions and billions of gold and silver every month. It's absolutely liquidity. There was 400 million ounce delivery requests that freaked everyone out. And, there is some conjecture, and I've seen people push back against it, but there was, I don't know, I don't remember the number, a massive, I'd say $40 billion withdrawal from the repo market. So at the same time or thereabouts, what they were saying basically is that this bank got in big trouble. The Fed had to step in and bail them out with a massive injection of money into the repo markets. They say there is no bull market like a gold bull market because the higher the price goes, the more reluctant people are to part with it as it reinforces their beliefs that led them this way to begin with. The reason that the price discrepancy is the way that it is, and most of the time they're the same price or very close to it. What happened was that if we go back to spring, May, June, there was very little demand in this industry from the mainstream. Once everyone was plowing into NVIDIA and everything, we were selling gold eagles for roughly half the price of what the brand new ones were right from the mint. to buy from the mint. We were selling to the public for $79 over spot. The allocations came out in May and June where you had to tell the mint this is how many we would like. And because business was so soft and we were able to sell gold eagles at such a discount, dealers who buy the coins from the mint, most of them said, we'll pass this time. And so they hardly made any. And then all of a sudden, business spiked and it became a very, very hard coin to get because the mint, again, the model of inefficiency, yep, they didn't make.
Andy Schectman begins by saying no one trusts the markets anymore. The recent repo market event proves it. Despite there being twice the liquidity in the system compared to 2019, the Federal Reserve had to inject $125 billion, a crisis-level move. The issue isn't liquidity, it's trust. Banks no longer trust the collateral each other posts, especially commercial and residential mortgage-backed securities. At the same time, something unprecedented happened. A major trader, or a group of traders, stood for 400 million ounces of silver delivery and refused cash settlement. For decades, the West could naked short precious metals because almost nobody stood for delivery, less than 1%. But now the new money from developing nations is wealthy, sophisticated, coordinated, and they understand that physical delivery is the Achilles heel of the paper markets. Schectman says a breaking point is coming. Someday one major short will panic and say, "This is an existential threat. Cover everything." Boardrooms must be tense, with billions in unrealized losses and no backing except rehypothecated paper. He adds that a new pattern has emerged. Contracts are being issued late in the month and immediately stand for delivery instead of settling in the first 48 hours, making COMEX activity harder to analyze. But every month, billions and billions of dollars flow into COMEX, much of it physically delivered or held in eligible vaults. The biggest money in North America is quietly buying massive quantities of gold and silver. He ties this to another huge event, a $40 billion withdrawal from the repo market around the same time as the 400 million ounce delivery request. A major bank was apparently in trouble, and the Fed stepped in again. Schectman quotes a saying, "There's no bull market like a gold bull market. The higher the price goes, the less people want to sell. This strengthens conviction and accelerates shortages." He explains the current price discrepancies. In spring and early summer, demand was extremely low because mainstream investors were obsessed with stocks like Nvidia. Dealers could sell gold eagles at huge discounts, even $79 over spot, and many skipped their min allocations because business was so slow. Then demand suddenly surged, but the mint, a model of inefficiency, had produced very few coins, causing scarcity. Schectman admits the situation is stressful. Running a metals business is demanding, but the stress also comes from watching years of his warnings come true. There's excitement, validation, but also fear because these events imply a systemic problem no one wants to confront. He says mainstream advisors have been wrong again and again, yet never admit it. Most investors feel isolated because they see risks their peers ignore. Markets are driven by human emotion, fear, herd behavior, and denial. The people who break away from the herd, do their own research, and follow conviction are the ones who thrive. He cites Rick Rule. The best money ever made comes from buying assets that are hated, right before the hate turns to acceptance.
And today?
The smart money, the quiet money, is buying billions of dollars of gold and silver globally every single month and standing for delivery.
I'm stressed because these markets are stressful, but which accentuate the stress of running a metals business and the costs of it and all of the things associated. I say that with apprehensive excitement. I am excited that, you know, that the things that I have said publicly are coming true. And it's also kind of frightening at the same time because as they come true, it speaks to a darker, deeper problem that I think most people don't want to confront. And that's why you don't hear this stuff from financial advisors or mainstream. They don't want to deal with it, but they've been wrong. And that's the part that no one talks about. Like they've been wrong, right?
Yeah, it's like the guy who says it's like Cliff who always talks about how much money he wins in the casino. Yeah, you don't hear about the losers.
Not only have they been wrong about the trajectory of gold and silver, if you are trusting a financial advisor to forge your path forward and they don't have the same outlook on life that you all do, if you're watching this show, you probably have a very hard time talking about your beliefs to your friends and family because you're one of the few people who
Get it?
have the courage to step outside the herd and not only do your own research but have your own convictions and beliefs. This is herd mentality. This is why there is Kondratiev wave and Elliott wave theory, economic theory, that says markets are only moved by human emotions. The few that can separate from what everyone else thinks is conventionally wise are the ones who succeed. And Rick Rule again will tell you that is the secret. Is the best success he's ever had is buying things that were dreadfully cheap. Yeah,
Yeah, and he said that there's no better money in the world, there's no faster money in the world than when the hate turns to decent,
right.
then you've already made your killing.
Yeah, and that's the way everything is.
Yeah.
The smart money is always positioned. And what's the smart money doing now? Oh, that's right. They're buying billions of dollars every week and month and standing for delivery around the globe.
If Andy Schectman is right, we are witnessing the early stages of a historic turning point where trust breaks, paper markets weaken, and physical metal becomes the ultimate safe haven. If you found this breakdown valuable, make sure you like, subscribe, and turn on notifications so you don't miss the next update. Drop your thoughts in the comments. Do you think the system is approaching its breaking point? Thanks for watching, and stay prepared.